So here we have a chart of the monthly S&P. We all know what happened last week. Down we were below 2,000, ended the week above 21,000. So now where do we go from here? Well, we have heard a lot of people saying, do you know what, it's gone too high, it can't go back, it can't do this, it can't do that. I look at the markets in a little bit of a different way. If I can show you just by putting this Fibonacci retracement level on, and you see all I've done, I've connected it from the 2009 low to the high. The important thing to note was that when we pulled back from the 2015 highs of 2134, look, we didn't come anywhere near the first 23.6 fib level. So to me, you're still in an uptrend. You know, we're going to get pullbacks. The greater the rise, the steeper the pullbacks. Obviously, we're going to have a bit of a problem at the 2120, 2134 area. But let's just look at this. If I put these little triangle-y things on like I do and connect it to those highs there, bang, 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 bang. Okay. So we're within this area. Okay. So what we're saying is, if you extend the triangle up, okay, we're talking November here, but look, you have got this potential for the market to go here in the next 6 months. Now, obviously, we have huge amounts of resistance in this area. We do have this lower high scenario. Okay, we have got 2134, 2132. This high here was 2116. Now this we made at 2120. So look, we've already broken this lower high scenario, but we closed, more importantly, above that trend line here that connects these lower highs. So we've got to be really, really careful, because what's happening is you're going to get the bears and the bulls all vying for supremacy, I suppose is the only word. There's a case to answer for the stock market going up, there's a case to answer for it going down. I think unless we break this 2130 area, 2134, okay, initially we're going to come lower. We're quite high on our monthly indicators, so we'll keep this in, but let's have a look at it on a weekly chart. And the weekly, as I've said to you lots and lots of times, the weekly is a very, very important chart. So I can click that off now because you've all seen that one. Okay, the weekly is a very, very important chart, because unless you know the actual what the market's done for the week, you can't get an idea of what we're going to do next, because history does repeat itself, and markets, out of a theory of chaos, there is some order to them. I mean, we show it time and time again on our daily charts, our weekly charts. You know, technical levels do hold when the world is coming to an end, or we're hearing that the world is coming to an end. You know, we tend to hold up. Last week was an exceptional week. Last week was a bit case for going down, case for going up, but at the end of the day, market forces drove us higher. This is the area we're going to be watching this week. Okay, 2130, 2134. Given that we've had such a strong week, I think we can go up there and have a little snifter at that. Now we know that we've got resistance down up at 2105. We hit 2108 on Friday, but we didn't sustain it on a closing basis. We closed down at 2102, still one of the strongest closes we've seen this year. So, and not only this year, if you look back, you know, it's one of the strongest closes we've seen since, wow, what, last summer. You know, so for a year, this is one of the strongest weekly closes we have seen at higher levels. Okay, so what do we do now? Where do we go now? This is a really good resistance area. If we can go above 21, let's say 2140, we can go to 2155 to 2160. That's going to be the key. I think that's going to give us a little bit of a pullback from those higher levels, and we should see the market come back at least to its break point. Now the negative thing that we're going to see is if the market cannot break above 2134 this coming week. As we've had such a strong close, there's no reason why we shouldn't. So failure is going to send a real shockwave through the market, and I think this is when we could see sellers coming back in their droves. Weekly and monthly charts are not showing overbought. Okay, you can see here that the weekly charts are turning positive off of neutral levels. This is because of this particular weekly close we've had. If we can't sustain it this coming week, these quite easily are going to turn back to negative. So this week, guys, is going to be a really important week for trading the S&P. This is the make or break for the rest of the year. We close above 2160. Given last week's action, hey, there's every chance that we might, but given that if we close above 2160, we really seriously have some upside projected targets. Look at this one. That comes in this week at 2200. All right, so this is just a rough guide of the weekly and monthly charts, just so everybody doesn't get carried away. Are we going to come back to here? I don't think so, but let's have a look and see on a short-term fib level retracement where we could actually come back to. Here would be a good level between here, okay, which is 2048. Well, we know that 2050 is acted like our swing level. Our first clue this week is if we cannot hold above 2075. Can't hold above 2075, then obviously we are going to come back and test that 2050 level. If we can break below there, and it's going to be difficult because look, we've got lots of levels here, but they're all levels that you should have in your head. 2041, 2035, 2025. These are not unknown to us levels. Okay, now we use this 2075 again as a swing level. Look at where we open. I'm looking at it now because it's like 2 o'clock in the morning. I'm looking at it now. We are slightly up, but not drastically. So let's see what we do today. The States are on holiday for their Independence Day. We may well have a quiet day. Tuesday is the day when I would expect them to all come back in all refreshed. So So let's see if we can take advantage of this. And if today, this morning, we cannot break 2108 or 2120, we're going to take this as a sign of weakness.